Hey, hello, this is Martin from CUES, the channel for learning about trading and investing. Welcome to Markets Next Week. This is weekly stock market analysis where we look at technical charts and try to understand what happened in the market and learn something from it and then plan for a better trade for the upcoming week. That's starting from September 18, tomorrow, Monday, 2023. So if you're not subscribed, please subscribe and then share it to your friends and colleagues. And here we go to the charts. This is the weekly view. We have a rounding pattern and multiple flag breakouts. Last week was a continuation of the previous breakout. You can clearly see that momentum is rising, trend is rising, absolutely. Banknifty also, it is broken out of the third flag and then rising up, just inches away from the all-time high, while Nifty has already hit the all-time high. Another weekly view, broke out once again after a retracement of nearly 6 to 7%, and on the indices, indices have reversed completely and broken out of that 78.6 Fibonacci extension on the Nifty, and it has hit the 61.8 Fibonacci extension of the Banknifty, and it's inches away from the all-time high. It's Banknifty and Nifty is already all-time high level of 200 and 222 levels. But that's a view. It's a breakout week in a nutshell. Daily, the Friday closing was green once again, but the spinning top kind of small body, but bullish candle after gap up. Absolutely the all-time high levels. You can see all the negative HNS head and shoulder patterns and all that is all negated now on both indices, and Nifty also has broken out on Friday. Also the closest weekly view shows that the close is green once again. Right. The candlestick view of the weekly shows that there's a wide range bullish candle with a gap up. It's absolutely, it's a kicker. It's a kicker pro gap. Plus bullish wide range bull candle that is seen, absolutely bullish candle on the Banknifty also weekly, no doubt about that. Daily candles are a little small body, that means there's a big bull bear fight that happens on Friday, but it ended up with a clean green, up more. Let's see the Bollinger Bands. Bollinger Bands is actually walking on the upper bands, expanding on the upside. Absolute bullishness is what is seen on the Nifty as well as the Banknifty, both walking on the bands about 20 DMA, much above far away. So it's gone too far from the 20 symbol moving average. So the further it moves away, there is the very chance, it's a big chance that it can come back to that, because of the main reverting nature. So, but the Bollinger Bands as such is indicating that it's an expansion of the price, that can be anticipated. Further upside can be anticipated because it's walking on the bands. Extreme bullish pattern. Let's get the numbers briefly. So it's 1.88, 373 points upon Nifty, hitting the all-time high, breaking over the cup and handle and the rounding patterns, multiple flag patterns and all that. Banknifty 1072 points, 2.3%. Banknifty has broken out, but it's still close to just inches away from the all-time high, as I said earlier. Nifty, it's 0.44, 89 points up on the Friday daily charts, and 0.5% up to 31 points on the Banknifty, up green. With a small spinning top. Spinning top, sometimes if it is with volumes and it's the top of the rally, has to be dangerous. So we'll be cautious about this Friday spinning top. It's not exactly a spinning top, it's a small body, but it's not that small as it is expected of a spinning. So it's more like a spinning top, more or less. It's not wide range basically, but it's definitely bullish. So not much to worry about, but got to be cautious that there is, there is a indecisiveness up there on the Friday, but considering the weekly candle, it's a big breakout week that happened. So after a breakout, some expectation of small slowdowns and consolidations can be expected because it's a vertical move that has happened, big vertical move. So interim corrections can come in, but the direction is very clear. It's upside. When the band's expansion walking on the bands, we already seen it's absolute bullishness. It's seen everywhere. Now the levels of support and resistances, we have a 20 expansion moving average support success. So right now the price is up there, it's all-time high. So the first resistance will be to 2020 to first begin with. Then rounding number 2500, 2300, 2400, right? So Fibonacci extension 38% is coming near to 2500. So market will go up to that. That's all you can see. You can predict on the chart. It's upside because it's the all-time high. Now support round, first major support would be the 20,000. It's a big rounding number, right? Then the 20 moving extension average of 19,733 can be a good support. After that, 50 extension moving average at 19,489. In between 19,650 and 19,600 can be support zones of previous ring lows. Also the 19,867 is the support zone. If it is falling down, breaking down from the big rounding number of 20,000 K. After that, the support would be 19,120, which is a 100 moving exponential average. That's the support resistance levels on the Nifty. Banknifty, the first resistance will be previous all-time high at 46,500 nearby zones, 46,400 nearby zones, 46,369 to be precise, and after that 46,300 and then 47,000 itself from that extension 23.6, and after that it's a long way to go till the Fibonacci 61 extension. That's how the targets and found upside when it's very close to the all-time high. Now first supports can be a previous swing low levels at 46,000 rounding number would have a good support. Now that it has broken out of that, then 45,782, 45,655, all this is supports. 45,400 supports, 45,100 support. Major support will be 20 exponential moving average with 45,000 nearby zones, 45,74 nearby. Then 44,950, 44,750, and then 100 exponential moving average, 44,200 would be the next support. Right, in between 50 exponential moving average in us. 44,750. So that's the support zone side. Basically, previous swing lows, gaps, and expansion moving average is what we look for the support resistances. So that's the Banknifty that we're talking about. Moving ahead, studying the momentum and the trend, we are analyzing the left side, the Nifty, and right side, the Banknifty. No, it's mixed. It's not like that. It's the left side. It's a weekly charts and these daily charts that you're seeing. Indices up. Upside it's Nifty and downside it's Banknifty. That's how it is. So weekly charts are showing absolute bullishness, rising momentum. Daily charts are showing absolute bullish momentum, rising up. So momentum, there is no doubt, it's absolute bullishness. Now for the trend, we are using the ADX indicator, which is also bullish, rising with rising trends on both time frames, short term and long, medium term. That's weekly and daily both. Absolute bullishness, no doubt, both momentum and the trend indicators, which you are analyzing with the help of RSI and the ADX. Right. Moving ahead, volatility analysis. The volatility was the volatility index, the VIX, India VIX, is actually very choppy. It finally ended up flat 1.3%. It's fallen down below the level once again. Danger zones where the historic low levels are there. The granular volatility is seen a lot. But last week what has happened is it has spiked up 12%, then spiked down, went down to 6%, and then finally midway somewhere with a doji kind of candle is what is formed with the VIX. So it's very volatile, but still, hopping around between 11 and 12 range. So that's it was very choppy last week. If you see, even though the market was up, the VIX was very choppy, but so finally, market is moving up, and then VIX is also moving up is a contradiction. That means the movement can face some resistance, what we have to understand, right? So VIX is behaving in a very abnormal level between 10.5 and or 10.3, that level, and 12 for the last several months, right? Even though the volatility day-to-day basis, if you see, it's not that much, maximum 20%. It has not gone beyond the 13 till now for the last several months, but granular volatility or the intraday volatility is very huge, big spikes, and that's what is happening. It's the peculiar behavior of this regime. Now, open interest analysis, if you see, it's a long build absolute bullishness on the futures OI, and for the September 2021 Nifty and Banknifty expiry, weekly expiry, open interest, if you see, PCR is bullish absolute, above 1.16 in Nifty and 1.04 above 1 in Banknifty also. Absolute bullishness everywhere. So options and the futures open interest is showing clear bullishness. This is the open interest charts that you're seeing left side Nifty. You can see that it's huge support that is seen as 20,100, right? Then 20,000, big put writing is seen there, and resistance is seen at 20,200, which is not a big resistance as in there. Banknifty also huge support at 46,000 has got huge support. Resistance is seen far away at 46,500 and 46,000. So levels, if you see, 20,100 to 20,200, 100-point range is what shows for the expiry. That's few days only away, and one day is a holiday next week, right? Wednesday or something. So 20,000 and 20,300 is the resistance. So very narrow, tight range, right? Absolute narrow range is what you see this week with respect to what the option call writers and put writers are way. Banknifty also tight range of 500 points. What has never happened like that. Normally, no more. The gap in the highest put and call writing zone would be 1,000, 2,000, 3,000 like that. Now we see that it's 46,000 and 46,500, very close tight range. And second level of highest put and call writing is seen as 45,000 and 46,000, only 1,000 points range. right? PCR and futures OI buildup is absolutely bullish. We already seen that, right? That's what bullishness all over there on the open interest side. Moving ahead with the sector analysis, that is, so if you see almost all the sectors are moving up except small slowdown happened. The FMCG is still not bullish on the both time frames. It's daily time frames. It's a doji and it's a slight sideways falling momentum is seeing in the FMCG. Otherwise, all the sectors are bullish. And reality last week went down less than 1% down, right? But still maintaining the bullish momentum on both time frames. So across the sector, IT, metal, auto, pharma, reality, all of them are in the bullish momentum on both time frames and absolutely rising up, and positions can be taken with tight stop loss. The FMCG just have to wait for some time because there is some consolidation or indecision that is seen there, right? So that's where the market is rising up, breaking out. So across the sector, movement is happening. This is the crude analysis. You can see left side on the corner, you can see IT. IT is broken out of that consolidation and it has hit a major gaps on. You have to be cautious, but momentum is rising up and bullish. Trend is also bullish. All-time high levels on the metals, bullish momentum. Auto broken out of the flag pattern, all-time high levels. Pharma, all-time high levels, broken out, bullish momentum, flag momentum breakout. FMCG, flag consolidation, breakout can happen at any moment, but momentum is absolute bullish, no doubt about that. Finally, reality is broken out and made all-time high, and then slight consolidation or volatile moves with the bullish momentum is seen there. Right. Next, we see the stocks which are contributing maximum to index, starting with HDFC. Big 2 weeks of big mega moves. Look at these volumes. It's a crazy volumes, highest volume that we have seen nearby. But momentum is still not climbed to the above 60 RSI. So, crossover of the trend has happened. Trend has turned to bullishness. Right. Once again, it has been in this zone for almost 2 years now. Right. Breakout of this 17,026 kind of 26 or 50 kind of levels is what everyone is looking for, and it's eventually going to happen. Look at this volume, there is a high likelihood that it can happen. Reliance Industries again, momentum is sliding sideways and then catching up again, but it's in a consolidation zone. Momentum slightly from the bullish also. But ICICI Bank is maintaining this bullishness and then a green close and then within a wedge, as a wedge, it's moving up. So ICICI maintains the bullishness, so there's a sideways and rising, especially HDFC Bank with big volumes. Now the breakout is happening in the INFI and the TCS. Both are climbed to the bull zones with a wide bullish candle, but remember that there is resistance up there for the INFI, gap resistance, which is very powerful. Right, a trend line breakout, a rounding pattern breakout, all that's happening. TCS, which is lagging again, gained all the momentum, and we have to watch out. Bullish momentum seen on both time frames. So IT is doing good. Kodak Bank, as usual, it's consolidating and doing up and down movement within a range. Nothing much happening there. Momentum is sideways. ITC after retracement now, once again, after having slipped in sideways, is climbing back but not reached there yet. So overall, the bullish momentum is seen absolutely in the IT stocks, TCS and INFI and ICICI Bank. Otherwise, across the sector, big moves are happening, but the leaders are only ICICI Bank and INFI, two stocks. Others also has to catch up. Reliance also has to catch up. It is also a rising move after slipping. So across the selling is happening in the major heavyweights primarily is what we can understand from here. So slight bit of worry that we don't have bullish movement across the majority of the stocks that is contributing maximum. It's not happened yet, but overall green closes happened in almost all of them last week. Institutional participation is like it's selling of 750 crores. So selling continues for this 8th consecutive weeks, but selling has reduced from 2,000-3,000 crores to 750 crores on a weekly basis, which is hopeful, but institutions are still selling is a worry. Some bit of buying, you can see that it has happened last week on the Fyers for some reason. Domestic institutions has been buying, they continue to buy at least 4,000-5,000 crores every week, and this week also 3,363 crores of buying has happened. On the derivative side also, net longs are moving up from the FI to AS side. So institutional participation is there. It's being balanced with the domestic institutions participating and keeping green, but overall the institutions has turned to green for the real breakout to happen. Until then, we have the worry. Global markets, here we have the dollar. We will analyze the dollar, the currencies basically, then the commodities and the global US market. That's what we are analyzing in this section. So dollar is 0.25% up. Overall it's 5.5% up. It's 105.3. It's bullish momentum. Couple handle breakout is happening. So dollar index is seen down here. Right? Couple handle breakout. Absolutely. Breakout momentum is in the bullishness. It's a worry for our economy. Look at the US dollar currency pair. Rupee is weakening every day. It's $83, and some intervention happened in previous weeks when the RBI pull back the money to normal, but every time can it be done always forever? That whenever the dollar is rising up and then rupee goes beyond the 83, then you intervene, and then how long it can be done? That's worry, because it's a breakout point. It has been consolidating below that 83 level for months and more than a year now. So that's a worry. Crude oil is breaking out, another worry. It's a parallel channel breakout. Momentum bullish, absolute trend bullish. Hold. Facing resistance, continue to face resistance, momentum sideways. Within a cup and handle pot. Momentum sideways. US markets. Resistance, red close, sideways slip. Momentum slip in the sideways. Dow Jones, Nasdaq, and S&P 500. It's in a descending wedge at resistance basically. So that's a summary. Right? Global markets, global cues are not that great. Crude rising, rupee weakening, gold more or less sideways, but US markets are red at resistance. That's a concern. Probably that's the only concern, because the market is breaking out. Our market is breaking out, but the global cues are not that great. The two stock picks, two actionables. Analysis over, now we're going to actionables. Two stock picks, Tata Steel and Punjab National Bank. Absolute crazy flag breakout on the Tata Steel with a inverted head and shoulder breakout also combined. This can go big, right? You can trade it, but moment is absolutely bullish, trend is absolutely bullish. Punjab National Bank, big breakout, rounding pattern, consolidation, double bottom breakout. All this is happening, absolutely is happening. The big mega move is what happened this week from 60 it went to 74 this week. Big breakout move, big large volumes, absolute bullish momentum, absolute bullish trend indication. Right, so that's the risk reward also marked in the green, the red. Stop loss is also mentioned there. The two stock picks, Tata Steel and the Punjab National Bank. Two picks for the next week on the stock side. So you have to purchase it as per your capital management. So there are recommendations and suggestions as per the what technical analysis for education purposes. What to see. Next action will use the index weekly option strategy. This is a double dial calendar spread that's coming again. Basically, we are selling the put and call options on either side for the near week, and then far week we are buying hedges on both sides. So that takes care of the volatility. The bigger moves can be advantages. The advantage for this is that the risk reward is less, not that great, but probability of profit and break evens and the cap margin requirements are very less. Alright, it will give consistent profit if you're getting out one day ahead of the expiry. That means Wednesday you have to get out. The range, look at this. Which other strategy can give you a range of 19,950 to 20,500 when the market is breaking out? Right. So this is what double diagonal spread is. Consistent profit, risk defined strategy. Now that we have seen all this recommendation, we have seen this analysis and studies and suggestions and all of this. Let's conclude. Let's wind up and conclude the conclusion. So basically, what has happened is it's a further continuation of the breakout, further up move. And market making a new all-time high. This is after a small retracement, 4 to 7% on the taxes. But overall, we are continuing the rally of 19 to 20% and going beyond that. It's breaking out of a cup and handle, multiple flat breakout. Now the bullish candles with the previous week, rising momentum, trend climbing, open interest bullish, PCR or Bollinger Band's upside expansion. All this gives bulls further hope that the rally is not going to stop here. It just started, it's rallying up. But the Fyers are selling off continuation, they're not getting into the buying mode yet. US markets are resistance and red, crude is rising up, rupee is at an all-time high. We have the Fed interest rate event also coming next week. Right, so there's some mistake there from the previous week. There's not 20k, but 20k is already conquered. So yes, the last week left over there. So that's to summarize all bullish cues is what we're getting from the charts. Right? Market is brown slope breaking out. Right? Big rounding number is taken out. Banknifty is inches away an all-time high. It has not made an all-time high last week, but mega more 1,000 plus points of up move is what we're seeing. So Banknifty obviously maybe next week making a breakout, a gap or something. And Banknifty, if it is breaking out along with HTFC and all that, you can index Nifty can go to 21,000 easily. So, but making note that it's a vertical moves, big moves that is happening, right? more than 2.5% or more than 1.5% or more than 2% kind of moves are happening, is the big moves. So naturally, some profit book will come in interim corrections. Sharps expected anytime. Right? That may come in one day in a move, and the next day it may come back. And all this, it is is to be expected. Vertically, market cannot move. It has to take the profit and it has to come down. But eventually, the direction is clear. So the market view for the next week will need to be, as per the charts, moderate bullish view. But you have to be careful. There is a Fed event that's coming on September 20th. A lot of inflation fears and Russian fears and all this still there. So anytime, black sands and things like that can damage all the analysis and screw up. So be cautious. All thing that is in your hand is manage your risk and manage your position size. Always hedge your positions. Right? So levels for next week is 19,800 to 20,500 on Nifty, 42,000 to 47,000 on the Banknifty. So as long as this 20,000 that has climbed and 45,000 that's already conquered last week, so if that is maintained, then there is every hope that the market can head towards the 21, 22 like that again. So that is very key to hold on what is gained. If it is giving up that easy, then we have trouble. So market can surprise you. Elections are coming in the May, so breakouts may like to happen after that, and not before that. So there may be consolidation period that can come in. There may be some reversals that can come in after moving a little more and all this. Market can surprise you. You can only talk about the probabilities of resistance and support is all that's in our hands, and the managing the risk. So always protect your capital hedges if you're carrying overnight positions. Right? And also, this opportunity can be also used as for buying or investing, stocks, and you can also have rental income for buying and option strategies, cash secured puts and forward calls also looking to you regular entries even when the market is going not in your direction, right? So all this is there in the playlist about that. So, but one thing is always protect your capital size, reduce your position size if the VIX is spiking, position size properly. Right, that's all. Right, and without stop, take happy losses, small losses. Keep your losses small and your profits big, whether you're buying or selling. In the options, especially, I'm talking in that perspective. Right, so that's a wrap up. So. If you're not subscribed and watching this, please subscribe and share to friends and colleagues so that it reach out to more people, and also we have very few subscriptions. I appreciate the help in this regard. Put me a feedback comments, we can improve on that. If you're interested in premium services, check out the link that's given in the description. Well, another thing is you subscribe to the social media channels like Twitter, where we regularly post technical analysis, which is not there on the YouTube. Right, YouTube will have only video once a week, but in between the days we are posting a lot of useful technical side articles on all of this social media. So subscribe to them. Right, so that's all I have. Happy trading, happy investing, happy learning. Right. Bye-bye.